Hello everyone, this is Manjula Devi P, working as Assistant Professor in GFGC Kanakpura. In this session, I would like to discuss about borrowing costs as per Ind AS 23. According to Indian Accounting Standard 23, which is converged as per International Financial Reporting Standards. So, what are the treatment and measurement of borrowing cost is the discussion topic of the discussion. So, what is Ind AS 23 and what is borrowing cost? First and foremost, borrowing costs are the interest. In simple term, borrowing cost means interest and other costs that an entity incurs in connection with borrowing of funds. So, whenever we borrow funds, of course, we have to pay interest, and at the same time we may also have incurred some commission or some other incidental expenditures, or if you are issuing debentures, you might have issued at premium. So, even that premium is also part of borrowing cost as per Ind AS 23. So, the objective of this standard is to prescribe the accounting treatment of borrowing costs. So, how are these borrowing costs are recognized and recorded in the books of accounts is all about Ind AS 23. So, Ind AS 23 defines about the meaning of borrowing costs and the meaning of qualifying asset. Okay, let us see what is qualifying asset in the coming slides. So, borrowing cost may include, as per Ind AS 23, borrowing costs includes interest on borrowings, as I told, a very simple term, interest, which you all are aware of, the interest that the firm has to pay on the borrowings. Then amortization of discounts or premiums relating to borrowing. Again, I told, if debentures are issued at premium, that means you are issuing say for 100, but when you are repaying back say after 5 years, you have to pay 110. That means the 10 extra that you pay is a premium, or you are issuing at a discount, but you are repaying at the par value. So, any such premiums or discounts also has to be amortized over a period of time, even that is considered as the borrowing cost. Then again, any other ancillary costs or any cost incurred in connection to borrowing is also part of borrowing cost, or any finance charges in respect of assets acquired under finance lease. If you are acquiring the assets under financial lease, any finance charges incurred are also considered as borrowing cost. And most importantly, any exchange difference arising from foreign currency borrowings to the extent that they are agreed as an adjustment to interest costs. So, here if the firm is borrowing the loans as in the foreign currency, and any exchange differences, anyway in the example we are going to discuss about that. So, any exchange difference arising is also part of borrowing cost as per Ind AS 23. So, how the borrowing costs are treated? Borrowing costs are directly attributable to the acquisitions, construction or production of a qualifying asset should be capitalized as part of the cost of the asset. So, what is the meaning of this qualifying asset and capitalizing of the cost? Let us see what is a qualifying asset. Qualifying assets are manufacturing plants, power generation plants, or any other asset which require a substantial period, which is generally more than a year of time for being ready or being them to a saleable condition. That means, if you are spending time on constructing the asset or on making the asset ready for use, and if the time takes more than 1 year, then any interest that you have to pay on the loan taken related to that asset should be capitalized, means should be added back to the cost of the, should be added back to the loan amount itself. Suppose I have taken say 10 lakh loan to construct a plant, and I have taken today the 10 lakh loan, and the construction of the plant takes say 2 years. Now at the end of first year anyway I have to pay the interest, isn't it? Every year I have to pay the interest, but the asset is not ready yet. So then I call that asset as a qualifying asset, and on that 10 lakh, if I have to pay 10,000 as the interest, then the 10,000 I don't pay. Instead, I add it back to the loan. That means my loan becomes at the end of first year not 10 lakhs, 10 lakh 10,000 is the loan amount, because I have capitalized the interest. Same way, second year end, again I have to pay 10,000, I have to pay interest 10,000 for example, again that gets added back to the loan itself. That means I am capitalizing the borrowing cost. When I can capitalize? When I have to pay on the qualifying asset, and until the asset is ready for its operation, I have to qualify the borrowing cost. That means I have to capitalize the borrowing cost. Then apart from this, any other borrowing cost should be recognized as an expenditure in the year in which it is incurred. Means any other interest or any other incidental expenditure, amortization of incidental expenditure relating to borrowing should be recorded as an expenditure, as an expense in the income statement. Only the borrowing costs on the qualifying asset should be capitalized. What is qualifying asset? So these are any asset or manufacturing plants or any asset which requires substantial time for it to be ready. Okay. Till that time, any borrowing cost generated on such borrowing will be capitalized. Capitalizing means adding back to the principal amount of the loan. Let's straight away come to an example. So here there is an example. On December 1st, 2016, Manyata Limited started constructing a plant. The construction is expected to take 3.5 years. It is being financed by issuance of bonds of rupees 7 lakh at 12% per annum. The bonds were issued at the beginning of the construction. The bonds carry 1.5% issuance cost. The project is also financed by issuance of share capital of 14% cost of capital. Now, what is the borrowing cost to be capitalized at the end of first year as per Ind AS 23? So, in this example, let us apply Ind AS 23 concept, what is basically being expressed in Ind AS 23. Let us see the first sentence. So, they are constructing a plant and it is going to take 3.5 years, means it is a qualifying asset because it is taking more than 1 year for its construction. Then for constructing that plant, they are taking 7 lakh, they are issuing bond for 7 lakhs and the rate is 12% per annum, and we know they are borrowing and 12% becomes a borrowing cost. And not just the interest, they are also incurring 1.5% issuance cost. For issuing, they are incurring some expenditure, and that expenditure is incurred obviously in the only first year. Then they are also financing the project by issuing the shares. Now the question is, the dividend that is paid on the share capital, is it part of borrowing cost? Then the answer is no. Borrowing cost is only on the borrowed funds. When they are issuing share capital, the dividend payable on the share capital does not constitute part of borrowing cost. So, we can take only the interest payable on the bond and the issuance cost of the bond as the borrowing cost. Now, let us see for the year end, first year end, what is the amount that has to be capitalized. So, if we take the interest expenditure, we are issuing 7 lakh worth bond, it carries 12% interest. So, 12% on 7 lakh comes to 84,000. So, that 84,000 is of course part of the borrowing cost. Then they are also incurring issuance cost. So, issuance cost of 1.5% on 7 lakhs, which comes to 10,500. Now, the 10,500 is of course incurred today, but that 10,500 has to be amortized over the period of the construction, that is for 3.5 years. So, if I divide 10,500 by 3.5, for first year I get 3,000 as the amortization value of the issuance cost. Now, if I total this up, totally at the end of first year I have to capitalize 87,000 as the borrowing cost. Okay, that means I should add back the 87,000 to the principal amount. Okay, so 87 is the capitalized borrowing cost. So, here I have given a note. The note is the issuance cost is one time cost, so has to be amortized over 3.5 years. Again, the share capital I am not considering because it is not part of loan, it is part of capital. So, Ind AS 23 talks about only the borrowed funds, not the share capital. So, hope you have understood the example. I have one more example. So, here also on 1st January 2019, Chandana Limited started constructing a plant. The construction is expected to take 2 years. Then it is being financed by 5 lakhs, 10% interest per annum. Then bonds also carry 2% issuance cost. Then they are also financed by some part of share capital, which is 12% per annum. I mean, cost of capital is 12%. Now, in this example, how much should be recognized as the borrowing cost? Now, let us see the solution. Interest, 5 lakh is the bond value, into 10% you have to pay. So, which comes to 50,000. Then the issuance cost, which is again one time cost, 2% on 5 lakhs comes to 10,000, and it has to be divided for 2 years. It has to be amortized over 2 years. So, divided by 2 will come 5,000. Now, 50 plus 5, it becomes 55. So, we are going to capitalize 55,000 as the borrowing cost. Again, issuance cost is one time cost, we are amortizing it over 5 years, and share capital we have not considered because it is not part of the loan, it is part of capital. So, just to recap what we have discussed in this, basically borrowing costs are the interest and other expenses related to borrowing. So, borrowing costs are capitalized if it is incurred on the qualifying asset. Qualifying asset are the assets which takes more than 1 year to be operational. Then other borrowing cost, other than this qualifying asset, any other borrowing cost that we are incurring should be recorded as finance cost or as an expenditure in the income statement, that is in the statement of profit and loss. So, these are some of the further references which you can refer for more examples. Definitely there will be some question on foreign loans also. So, please go through with the foreign loans example and multiple interest loans, like for constructing one particular plant they would have taken from multiple resources. So, and with different interest rates. So, you have to just calculate accordingly whatever the interest you are paying on particular loans, and then you have to sum up the total borrowing cost. So, please do practice more examples on the borrowing cost. From the point of view of exam, it is one of the very important topics. topic. Thank you very much.